The S&P 500 is right near all-time highs. Tesla's bouncing back. Trump's meeting Xi soon. And oil? It's up more than 6% after new sanctions on Russia. All eyes are on tomorrow's CPI report. And it's shaping up to be the biggest event of the week. The S&P 500 and SPY are sitting just $2.50 away from all-time highs ahead of this key inflation release. Over the past few weeks, SPY has been straddling key resistance, especially since the October 10th Friday sell-off. Now, with the index this close to breaking records, one report could decide the next big move. If tomorrow's CPI reading shows cooling inflation, expect bullish pressure and a possible breakout to new highs. But if inflation comes in hot, markets could reverse fast. Meanwhile, there's more global tension brewing. We've got China updates on deck, Trump's next big move, and a crucial interest rate decision next week. But first things first. All attention is on that CPI number tomorrow morning. 1 hour before the market opens. Here's what traders are watching closely. The year-over-year inflation rate is expected to tick up 0.2% to 3.1%. If that happens, it would mark the highest inflation in nearly a year and a half, levels we haven't seen since May 2024. Core inflation, both month-over-month and year-over-year, is expected to stay the same. But that jump to 3.1% still has investors nervous. This report is especially critical because it's the first major economic release since the government shutdown began on October 1st. Some are even calling it the report of all reports. JP Morgan's trading desk estimates a 65% chance the S&P 500 will rise after the release. If the core CPI comes in at 0.35% or lower. But if inflation runs hotter than expected, things get tricky. The Federal Reserve is already preparing to cut rates to stimulate the economy. At the same time, inflation is creeping up. If tomorrow's report confirms rising prices, the Fed could be stuck between cutting rates to boost growth or holding firm to fight inflation. Either way, the market's next move depends entirely on how that CPI number lands. Next week brings another massive event, the Federal Reserve's interest rate decision on October 29th. There's currently a 98.9% chance of a 25 basis point increase point cut, according to market odds. But if inflation surprises to the upside, that certainty could vanish overnight. Meanwhile, geopolitics are heating up. Trump just announced he'll meet President Xi on October 30th at the APEC summit in South Korea, just 48 hours before a 100% tariff increase on Chinese goods is set to go live. This will be their first face-to-face meeting since 2019, and the stakes couldn't be higher. The existing trade truce between the U.S. and China expires on November 10th, and both leaders have been firing back with new threats week after week. And before that meeting, U.S. and Chinese officials are holding preliminary talks in Malaysia, setting the stage for what could be the most consequential U.S.-China trade showdown in years. Between rate cuts, tariffs, and inflation data, markets are standing right at the intersection of monetary policy and geopolitics. Expect volatility, no matter which way the numbers go. Even before tomorrow's data, we're already seeing big movers. Intel is surging after earnings, reporting 23 cents per share versus 1 cent expected, with revenue beating at $13.7 billion. This is Intel's first major comeback report since the U.S. government took a 10% stake back in August. The stock's now pushing past $40, showing real signs of a turnaround. Then there's oil, up nearly 8% in 2 days as sanctions on Russia tighten. Crude now trades just under $62 a barrel, lifting stocks like IXY and CVX. Trump's energy pressure on Russia and India's potential response are fueling this short-term rally. And Tesla is back in focus. Despite weak earnings at first, its energy storage business jumped 44% last quarter, pushing shares toward that key $450 resistance. Watch that level closely. A breakout could trigger big scalping opportunities. On the flip side, traders are also watching UVXY for a spike if markets sell off. It jumped 19% on the last panic day, and could do it again if CPI comes in hot. And to wrap up, today's big money trade is on XOP, the oil and gas exploration ETF. A trader dropped $1.1 million on 137 strike calls, expiring December 2025. A long-dated, high-risk, high-reward bet that oil will keep climbing. No matter what happens tomorrow, stay sharp, manage your risk, and trade with strategy, not emotion, because the next 48 hours could set the tone for the rest of this quarter.